Hello guys, how's it going? It's been a while since I have made a video breakdown for you guys. I believe the last time I did such a thing was quite a few months back, possibly in June, maybe earlier than that, maybe in May. Markets have been quite difficult to read recently anyway. Usually they do come to this point when we approach the end of a particular quarter, so that whether that be the first quarter or the second quarter, doesn't matter. When we do approach the end of these quarters, we can see that price does move quite exponentially in many different ways. It's important to just step back at this point in time and just reevaluate basically before, without you making any sort of rational trading decision, so to say, that can harm your trading account basically. So you guys probably have noticed over the past 2, maybe 3 weeks, we've been a little bit quiet here on the Telegram and also on the Instagram as well. The reason being is we don't really want to be pushing out content that we don't believe is 100% accurate, and where our members cannot benefit from that. Alongside that as well, we've been focusing on the Inside Effects website. It's been pushed back quite a few times. That's mainly because we are trying to basically provide the best content that we can on the website, and making sure that you guys can have access to a fluid website that's full of knowledge and full of content that you guys can essentially get. Well, obviously when you join up, you can kickstart your trading journey straight away, because there'll be vast amounts of information on there. But like I said earlier, I wanted to get a Eurusd video out for you guys. The reason being is there's quite a lot of information to explain, and I thought it would be easier for me to actually make it into some sort of video. I'm just going to make this very short and sweet, and try not to confuse you guys. Yeah, so let's get straight into it. So as you can see, previously we were trapped in this 950 pip range between 1.0500 and 1.1450 over here, and obviously once we did break, we rallied all the way up towards 1.2400, which is quite a significant upside move, I would say. I guess you could say you could have caught it, but let's not focus on that for now. So once we did actually approach the 1.2400 resistance level here, there were a series of lower highs being formed over here, and from this lower high we essentially took out this higher low. Okay, so price has actually melted through and beyond our weekly resistance, which would have been support. Now it has turned resistance, so of 1.19250. So we've taken out this higher low over here, following this monthly candlestick. We came as low as 1.1510, and we've basically maintained for the past 4 months. We've actually failed to actually close on a monthly time frame below this level, so might be a while as of yet, and just let me explain to you guys why. So once we did achieve this particular level, 1.1510, taking out the previous higher low, we came and retraced back towards this level here, 1.1850, and we eventually rolled over towards our minus 27.20, which was then at the time our extension target was just around here, which was in line with our prior resistance based off this really strong bearish candlestick movement over here. So as you can see, we came back, we met it to the absolute perfection, and we spiked all the way back up to close not only above the monthly support, but again above the 1.1510 level. So where do I see Euro heading to next? This is where I found a lot of confusion. So obviously once we did make this move from this lower high to this lower low over here, and then we formed a new lower high and then a new lower low over here, essentially what happens is we've got a new Fibonacci in place. Okay, so this is our new Fibonacci from this lower high, okay, which was the lower high made previously, so the FIBC retracement that was made previously before extending towards our extension target of 1.1300. So this is our new fib. So as you can see right now, okay, once we've achieved this extension target over here, what I've done is I've placed this Fibonacci retracement from this high to this low, and as you can see, the current monthly candlestick came up to spike that level to the absolute perfection. Okay, so let's step it down towards a daily time frame. Sorry, actually no, I haven't finished yet. Discreetly, as we can see as well, things are still bearish, especially on the monthly time frame. We've got the moving averages crossing over to the downside. You may be able to see it, but yeah, they are discreetly moving over to the downside. And as this monthly candlestick falls lower, okay, so we've still got another week or so to go before the monthly candlestick closes, but as this continues to drop, which I am expecting it to do so, then this 8 EMA on the monthly time frame will continue to come to meet the highs of that particular candlestick right there. So we could eventually break out of this 1.1510 potentially on a monthly time frame. That would be a great indication to essentially come and complete our new extension target of 1.1150. okay, which is a great psychological level as well. And if we step down towards lower time frames, you'll be able to see there was many prior levels of support at that particular region. So let's take a look at the weekly time frame just for a little bit more clarity, so you guys can see exactly what I'm talking about, where the prices react to particular regions as well. Okay, so there's two Fibonacci's just over here. Let me get rid of this one. Sorry guys, usually when I record, my laptop just goes a little bit slow. Little bit slow, but that's no problem whatsoever. You know, we're just gonna have to fight through it. Bear with me guys. Okie doke. So yeah, so that's the same Fibonacci retracement that I showed you guys on the monthly time frame, and as you can see from this lower high to this lower low over here, when prices came back to rally, okay, look what happened just over here. Okay, on the last week of August, we came and spiked that 78.6 Fibonacci refined fib region here, the 78.6 retracement level to the absolute pip, sorry. And on the weekly time frame, look at how much we retraced, okay, and to actually closed well outside of the refined fib region. Okay, so not only that, but the next candlestick, which was the beginning of September, we came up to reject it and again closed below the MAs once more. The weekly candlestick, which formed last week, apologies. Yep, the weekly candlestick that formed last week came and actually tapped the 61.8 retracement once again. It actually stuck well beyond, but the weekly candlestick closed less than 50% of the entire overall movement, and also closed below the 18 moving average. So the current weekly candle we can see is that prices have come in again once more to the refined fib region. Okay, so if we step it down towards lower time frames, such as the daily, the 8 hour for example, we're going to be able to see the potential for a reversal happening some point soon. So let's step it down towards the daily for you guys. Alright then, so on the daily time frame, what I've done is I've actually mapped out these ABC retracements over here. So we've got that high over here, that lower high that you guys can see on the weekly and the monthly time frame, and the lower low over here just off the 1.13010 level, and this is the FIB-C retracement. So this is the ABC, okay, and as you can see, that was that last weekly candlestick in August. Look at how perfect that rejection was. So yeah, so we've got that, and on the daily time frame, is pretty straightforward realistically. We're trapped below the 1.17250, essentially having multiple retest. I think it's triple top now that we've had on the daily time frame of this particular level. And what we essentially need to see now is a push outside of the 61.8% retracement, a break of this counter trend line in order to go short. What I am expecting potentially is some sort of reversal from here, in and around this region, to break beyond the move, the ascending trend line, come slightly lower, okay, retest the 61.8. We should be ready for a good downside move. Now, from 1.16 all the way down to 1.15, obviously from this current market price 1.17. If we calculate the move to the downside of 1.1150, you're looking at a decent risk reward ratio. Even if you do place stops 25 pips above this particular high here, just to ensure that you won't get swiped out. You know, there's a lot of manipulation that happens in the market, especially over the last few weeks of a particular quarter. So that's my current outlook on Euro USD. There's no immediate entries going on anytime soon on this currency pair, but we are range bound between these highs here, between this level, between this region of 1.17250 and again 1.15250. okay, so if you take it from pretty much candlestick closure to bottom wick, it's around a 185 pip range, which I am expecting to break at some point. If we look at next week in terms of fundamentals, we've got US interest rate decision, which as you guys may or may not know, the US economy has had a pretty phenomenal summer, okay, in terms of manufacturing and whatnot. It's been a pretty good summer for the US, so that will obviously direct into inflation and everything else, and also the Fed have openly stated that they are continuously looking to raise hikes for a further 2 times for the remainder of the year. So September is pretty much a no-brainer. Again, we can't be fully sure of the market and what it does. However, market participants are quite confident that there will be a rate hike in this month, next week. So that's the daily time frame. Let me just step it down again to the just once more to the 8-hour time frame. I won't step it any lower than that, unfortunately. I've got to get going pretty much, to be honest with you. But this is that range that I was talking about on the daily time frame. As you can see from candlestick close to bottom wick, we've had some very strong rejections off that particular region right there, and I am expecting price to roll over. So we've got a test over here, another retest, another retest, another retest, and another retest again happening today. So overall we've had 1, 2, 3, 4, around five rejections off this particular the height of the box range here. There's 2 hours and 48 minutes left of the 8-hour candlestick closure. Can we close outside the ascending trend line that we can see over here and potentially get a short opportunity? Disregard this risk reward ratio tool that I've got over here. In fact, I'm just going to get rid of it. I placed it just after I basically uploaded my analysis inside the Telegram this morning. So yeah, I do believe that we can break this ascending trend line that we can see over here. Not only that, but if we take this particular trend line over here, which is actually the daily trend line, so if you go back to the daily, which I won't do, but if you guys rewind back and take a look, this is the ascending trend line that we can see on the daily. So if we get that kind of breakout, we're going to drop down towards that 1.16250. 1.1640, which is essentially where the 61.8 retracement is. So roughly around here is where the 78.6 is where we've got this particular candlestick from. So again, I mean, this pair is pretty much ripe to go to the downside. We've seen Michael Barnier and the EU kind of softening up their approach to Brexit. I mean, that's not, I don't know if that relates down to price action, but it looks to me like they're getting quite desperate in getting a deal done. So it'd be quite interesting what happens over the course of the next few days, remainder of the week, and also going into next week as well. That's my current outlook on the Euro USD. I hope that gave some sort of insight as to what's happening in the market. I believe the dollar will strengthen. I know there's a lot of talk about the trade war and tariffs, and I've mentioned it previously myself, but to be honest with you, I think that all it will do is just provide a little bit more strength for the USD. And especially coming into next week as well, as we've got the Federal Reserve who are looking to hike interest rates. I think that will only be an additional boost, so to say, for the dollar. So yeah, once we do break this ascending trend line, my immediate target area and also my immediate support area would be the 1.15250. I'm not saying immediate as in it will happen tomorrow, but the first area of support that I believe we'll get to is 1.15250, 1.15250. Yeah. That's all for me today. I'm thinking of doing some sort of Sunday breakdowns or Monday breakdowns. Which preferably in the evening might be better. There's a lot of movement that happens and occurs over the weekend, so it's always good to let Monday just blow out the way. Yeah, if this analysis helps, then feel free to send me a message on my Instagram. It's Oscar Allison FX. Be sure to check out our Instagram, Inside Forex. Send us a message if you'd like a little bit more clarity on anything that I've explained today. A quick update on the website again, just before I let you guys go. It's looking really great. Just finalizing a couple updates on that as well. A couple of videos that we want to upload, such as our vlogs, as well as tutorial videos on how to manage your risk correctly. The main purpose of the analysis is to obviously align it with yours, or if you want to take our analysis and use it to obviously attain profits, then fantastic. What we want to make sure is that you know how to handle your trading account correctly, essentially. So we want to put these two videos together for you all, so that you've got a good platform where an excellent platform where you guys can learn, a great community where essentially we'll be able to bounce off ideas, and yeah, that you guys can obviously head back to every single day and check out our market updates. So again, that's enough for me today, guys. It's been I've actually enjoyed making a video. I really do want to keep on making them for you guys, so I will consider that. Let me know actually if I should do some sort of Sunday Monday breakdown. That'd be quite interesting. Yeah, so hope you have a great day. It's Wednesday today. Again, 2 days left. Yeah, peace, take care, thank you very much, bye bye.